And lo and behold, just at the time, in November of 2009, November of last year, just at the time when it looked like the dollar was going to tank big time, that the dollar was going to go into a free fall, and that would make by default the euro as the only viable alternative for a world reserve currency. At that precise moment, what happens but the three U.S. rating agencies, and the U.S. has a monopoly, Wall Street has a monopoly, the largest shareholder in Moody's, I believe at the last count was Warren Buffett. Wall Street has a monopoly on these private rating agencies that rate the credit of governments as well as private banks and companies, and toxic waste as well, by the way. And the rating agencies began to downgrade Greece's sovereign debt and put a flashing red light on the future. Then into the new year, into 2010, they escalated. The new Greek government that was elected in the autumn of last year, the Papandreou government, started coming out and saying, we have to make a clean breast of things. The previous conservative governments have cheated to get Greece into the euro, and we want to do it right, and so forth. So then Wall Street, the hedge funds, George Soros and various giant hedge funds had a closed-door meeting in Manhattan in New York, I think around January, February, to talk about the future of the euro, and you can believe that they more or less came to the same conclusion. In other areas of business, that would be known as collusion. Somehow or another, no investigation has been made by the U.S. authorities. One can only imagine that the U.S. authorities were quite happy to see these private financial gods of money, as I call them, of Wall Street go savagely short the euro. So it had a dazzling effect in terms of creating a rolling crisis into some of the weaker indebted economies, Spain after Greece, Portugal, a little bit into Italy. But the crisis has begun to taper off simply because the governments of the Euroland countries got together and said, we're not going to let the euro project falter on a tiny country like Greece. We're going to do what's necessary up to $1 trillion worth of credit guarantees to make sure that the sovereign debt of Greece, when it's rolled over, is credible. That's what happened. The same day that was agreed in principle, this is the telling point of this, this past, I believe it was in March or April, the same exact day, Standard & Poor's downgraded the sovereign debt of Greece, not one notch. They normally downgrade only one notch at a time. They downgraded 3 notches to junk. And pension funds and many other funds are forbidden by law to hold junk-rated debt. They have to sell that immediately. So that, of course, created a panic sell-off in Greek debt and in the euro, just at the point the rescue operation had been agreed in principle. So this is sophisticated financial economic warfare, and the point about it is quite simple. If the dollar goes down as world reserve currency, America is a paper tiger in terms of financial superpower. The whole power of the United States after World War II, as I mentioned earlier, has been built on 2 pillars. One is the dollar as world reserve currency. Number 2 is the military might of the Pentagon as the unchallengeable military power on the planet. And if one of those 2 collapses, the U.S. elites are in deep, deep trouble, and they know it. That's the whole background in an eggshell to the euro crisis.
That is that's hard to swallow, William. I mean, that is some very heavy stuff. You know, and basically you're saying that the elite here in the United States, Wall Street, combined with all of of course, the other elitists as well, the whole cabal, have a interest in seeing Europe basically
weakened.
Yeah, weakened.
Yeah.
Not destroyed. Yeah. But just basically to take the spotlight off of them during their times of crisis. You know, it's bizarre because I remember when the euro crisis hit, how there even seemed to be just glee on the faces of the financial commentators. It was almost that sigh of relief that the spotlight had been taken off of the dollar, at least just for a split second. And the
Well, that's it.
and the dollar had a little bit of a rebound as the euro went down. Of course, like a seesaw, those two currencies operate. And
Yeah.
but now we're beginning to see the euro rise back. It's becoming more resilient. What is your long term? Let's do short term and long term view of the European Union. How do you see this going down in the European monetary system?
The European Union is here to stay. There's no question about that, and the euro is here to stay. I have many disagreements with the, the formal structure of the euro. There are huge flaws in the construct. Number one, it's not transparent, and the European Central Bank is independent of any political checks and balances. In some ways, similar to the Federal Reserve, which is a privately owned institution or series of regional central banks. That being said, the euro is not about to disappear. I said this in February and March of this year in various televised interviews that are on my website, that this euro crisis in the long term was a tempest in a teapot being aggravated in order to take the pressure off the dollar at a critical point. Now, in terms of long-term outlook, the long-term outlook for Europe, the economy, one benefit of the cheaper euro, perhaps the hedge funds didn't intend this, and the U.S. Treasury Geithner's people, when they perhaps behind closed doors began to plan this or talk about it, one unintended consequence is that the exports of euro land have become incredibly attractive as the euro becomes cheaper against the dollar. And the European economies, as a result, over the past 3 months, have started booming like they haven't boomed in several years. And suddenly, from a black, bleak outlook of growth that we had a year ago, Europe is starting to add jobs again in the automobile sector. You know, in Europe, cars are still made to last. They're still quality products and not just adjuncts of financial holding companies like GMAC in Detroit and so. So they're quality products, and the world knows they're quality products. So they're starting to buy them again in large numbers, especially in Asia, in the Middle East. So Europe, the outlook, Europe never had the kind of structural problems that the U.S. had when the crisis broke in '07. So it has still a real economy. It has still steel industries and automobile industries and so forth. The tragedy of the American crisis is that for at least the next decade or more, the United States economy and the United States population is going to be put through pure hell unless they do something about it in terms of cleaning the Augean stables of Wall Street power in Washington and the Congress. And everything has been outsourced to the rest of the world, so that there's such a deficit of indigenous American know-how and experience. Americans are some of the most creative people in the world if you get them into a problem-solving situation, but they're not even allowed to exercise that anymore in entrepreneurial enterprises and so forth, except in the services sector. So it's a very, very tricky situation to come out of this crisis in the U.S.
I think the fear for many around the world now is that the dollar obviously is the safe haven, but for how long? And many are still choosing to hold U.S. bonds. Many are still choosing to hold U.S. dollars. But over the long haul, most people know it's an unsustainable game. It's not something that can last forever. It's a confidence game, and as long as there's confidence, which obviously is very shaky right now, the dollar will be still the king. But what happens in the future regarding the dollar versus other currencies? There, obviously, if there was another alternative for countries to be holding, we know that they would probably be holding it because the U.S. dollar obviously is very speculative as we head into the future. We see the rise. We see the rise just today. There was a story that came out that China just rose to the second largest economy in the world, not on a per capita basis, but just on a different basis, sheer size. Yep. And the fear obviously is that they are right behind us. They're on our heels. We're probably looking about 2025, according to most reports, where they're actually going to surpass the United States. The European Union and the euro. Do you see that as the new reserve currency by that time? Let's talk about the US, the EU, and China. Obviously, three formidable forces that we just don't know exactly how the landscape is going to look financially in 10, 20
Sure,
years. Talk
sure,
about China in relation to the EU and the US.
sure. I've been several times to China, extensively traveling all around the country, giving talks and lectures at various universities and think tanks and so forth in the last years. So I have a sense of that country, and I can tell you one thing. There is a dynamic work ethic that's unbelievable. It's 24/7 almost. There's such an optimism in the young people that you see across China. It's just a tremendous energy because they feel that for the first time in maybe 1,000 years, China is able to advance as a not as a power, not as an empire that's going to swallow up the rest of the world. They're not like the Pentagon people, but or Wall Street. They're simply content with building their economy and coming out of a extremely backward hundreds of years history to have the standard of living that they think they deserve.